Thank you for joining us today for a very special talk. A couple of weeks ago, we had the Minister of Finance and the CEO of Stock Exchange spoke about the financial world in Qatar and in the neighborhood and the stock market. And today, we have the governor of central bank who has major influence on what's happening in the economy. An exciting talk titled Qatar Central Bank's Role in the National Economy. About half an hour after that, we will be taking questions. His Excellency Sheikh Abdulla Bin Saoud Al-Thani was appointed governor of Qatar Central Bank in 2006. He started his career there in 1981. He was deputy governor from 1990 to 2001 for 11 years, and then left to serve as the chairman of the state audit bureau for 5 years before assuming his current position. He was appointed as chairman of the board of directors of QFC Regulatory Authority in 2012, and later on as chairman of Qatar Financial Markets Authority in also 2012. His Excellency is the chairman of Qatar's Financial Stability and Risk Control Committee. He was appointed as the chairman of the Islamic Financial Services Board in 2013 and chairman of the International Islamic Liquidity Management Corporation until December 2013, and is currently a member of both institutions. Folks, this is a very long resume, make it short. He also serves as the chairman of the board of directors of Qatar Development Bank and is a member of the board of directors of the Stream Council for Economic Affairs and Investment. He served as the chairman of the board of directors of the Gulf Monetary Council for 2014. He is board member at Qatar Investment Authority and the chairman of the governors of GCC monetary agencies and central banks committee. I stopped there. He's going to IMF next week. It's a great pleasure to have with us Sheikh Saoud Al-Thani today.
Good morning. First of all, I would like to thank the university and the dean and the faculty and everybody who is attending today. And I think my subject, I will speak about Qatar Central Bank's roles in the national economy. But before that, I think we have to say a word about the three policies which is in each country playing a big role. There is the fiscal policies, there is the common market, and there's the monetary policy. So today I will touch the area of the monetary policies and the role of the central bank in the national economy. There are three policies dominated the macro and the microeconomics functionalities in any country, but also there are functionality of a cross-border and spillover today is become one of the important subject which is need to be managed. And in my subject today, there are 9 items I will touch. I will talk about the global development, which I have seen during the last couple of years, and then I will touch our domestic performance, economy, macro and micro, and trade side, and also the role of the Qatar Central Bank, and also the Qatar Central Bank's monetary policy framework, and Qatar Central Bank's financial stability framework, and Qatar Central Bank's role in the market development, in the capital market and other market. And also I will touch later on in the Qatar Central Bank's role in the developing the market infrastructure, like the yield curve, and also the capital market, and other instruments which participate and manage liquidity. And the last, I will talk about the current policy challenges which we face, and how we can, in the future, we can tackle these issues. So this is the 9 items which I will touch in them today. So we'll start with the global development, and we can see there is uneven global growth. We have seen in the last couple of years, there is a growth differential between the East and also the European market and also the US market. But today we are having a strong growth in the US and also weaknesses in the Euro area and Japan, and slowdown in the emerging market, led by the China, which is, we have seen a lot of volatility in the last 4-6 months. But not only in the growth, which is the major subject for us, which we are following, we have the monetary policies divergent. There's a talk now, there is expected that interest rate will increase before the end of this year in the US, and the quantitative easing continue in the Japan and also in the European market. And we have mixed policies in the emerging market due to the volatility of stock market and also the changing of portfolio movement from one country to another. And in the last year and during this time, we have a low oil prices. Definitely this will play a big role in some of the country in this region, that the price has already dropped almost into the 40s, and that has also impacting the revenue of these countries. Therefore, there might be some change in their expenditure, but also it's become a saving for country who is importing these oil, which might also they contribute to the expenditures in the global, which might lead to a growth, and the imbalances uneven will become uneven somehow for a global movement. So this picture shows a growth of forecast by the IMF. There is range between, they expect this year in the US 3.7%, and in Europe 1.5%, China 7%, India 7%, and Japan is 0.8%. Now in the financial stability risk, we do have the volatility in the exchange rate. So we saw the strengthening of the US dollars and the weakening of other currencies like the euro and the yen, and depreciation of the other currency in the emerging market. There is volatility in the capital flow, and we have seen capital flow going to a safe haven places like the US, and there is some withdrawal portfolio from one market to another due to the movement of these changes in prices in the stock market and interest rate. And also there are stock market risk, which is affecting the market and the portfolio movement, which used to be going from the west to the east. Now we can see that volatility going to a safe haven somewhere in the US. The performance of Qatar economy, yes, oil prices went down. We can say there is a growth. It will continue, although at a moderate rate despite low oil prices. This project, which is in the market today, the government is continue to complete them, like the ones and like the train and the project of the board and also the other these projects is they will be continuing going on without any kind of effect by any, despite the low oil prices. And the good sign we have seen also the non-hydrocarbon sectors has been also it is in the double digit, and that's also is a sign that the private sector is contributing to the diversification of our national economy vision of 2030. We have, in the resilience financial sector, we have comfortable liquidity in the banking system. I assure you that in the last 4 or 5 years, we accumulate so much liquidity in the central bank by issuing a lot of treasury bill and treasury bond. And that's about like, at this moment, we have about 120 billion riyals, which is owned by the banks, and they are ready to go in any times. So, and also we have an auction every month, every Tuesday of the first week of every month for treasury bill ranging between 3 months, 6 months, and 9 months. And this treasury bill, which is we auction, is measuring liquidity. So we have 4 billion every Tuesday. In the first week of the month, we issue and we auction, and we can feel how much liquidity and how much affecting the interest rate and the impact of each bank by itself. So we assure you that there is a comfortable liquidity in the banking system. And also in the performance of our Qatar economies, we continue having a high credit rating for Qatar, is rated AA and stable outlook by Standard & Poor and Fitch, and rated AA2 stable outlook by Moody's. And the role of the Qatar Central Bank, we are supporting the growth, maintaining low and stable inflation, and maintaining low interest rate, and also supporting economic diversification, as we are also part of the national vision of 2030, and also for 2011 to 2016 for our own strategy for regulatories, which has also support. Diversification is the one important subject. So promoting financial stability, we are ensure appropriate liquidity in the system, making the banking system healthy and resilient, and promoting market development and ensuring the efficient and secure payment and settlement system. Now we move to QCB policies framework, and that's, we have been since after the 2008, we start developing our monetary policies by changing, first of all, our law and article number 5 and 6. In our QCB law number 13 of 2012 has this objective: stability of real exchange rate and its convertibility to other currency. Stability of real exchange rate means maintaining the fixed parities between reals and the US at the 3.64. Monetary stability, implied growth in money supply, consists with desired growth and inflation rate. And stability of price of goods and services is reflecting in a low, stable inflation. The CPI inflation is at 1.6 in July 2015. So what instrument we use up to now since 2009 or 2008? We do have a policy rate, we have liquidity management tools, and we have macro-prudential tools. In the policy rate, we have QCB, QMR deposit rate, we have QMR lending rate, and we have repo rate. Liquidity management tools, which we use to to reach this objective, we have auction of treasury bill, the 3 periods, 3 months, 6 months, and 9 months. And we have also treasury bond auction for 3 years, 5 years, and 7 years, and 12, and 10 years. We have a reserve requirement set at 4.75, and we have also repo active market. Macroprudential tool, yes, are considered complementary to the monetary policy as they help address sectorial pressures. While policy interest rate affect the whole economy. So we look at sectorial more than as targeting our monetary stability. So it's become a complementary. Operation procedure, managing short-term interbank interest rate by using our policy rate changes from time to time and managing systematic liquidity. And also KIBOR as an indicative rate. KIBOR indicative rate was introduced in May 2012. It is calculated by Bloomberg in behalf of Qatar Central Bank. It is an average of indicative rate for interbank borrowing in riyals quoted by 10 participant banks at 10 a.m. on each morning. And KIBOR fixing are publicly available for 8 different tenor ranging from overnight to 1 year for each business day. So this is done by Bloomberg. So where we are now, we have a fixed exchange at 3.64, and our policy rate is 0.75 for the QMR deposit rate. Lending rate is 4.5, and repo rate 4.5. Well, QMR lending rate and QMR deposit rate, you will see it as a corridor for our managing our interest rate of overnight, and you will see it later on. In liquidity management strength, the auction is going on since 2011, and treasury bonds since March 2013. And we are linking the maturity to create our yield curve. The reason we are creating our yield curve, you will see it later on, that we are heading toward improving our capital market. So in the prudential limits on banks borrowing from deposit with the QCB through QMR minus bank by bank ceiling. Reserve requirement ratio is still at 4.75. It's still holding at a high rate, and that's also part of our managing our liquidity. We can reduce it in any times to create the multiplier effect later on. Low and stable interest rate, general easing of interest, interbanking rate, treasury bill rate, and interest rate on consumer deposit and credit facility. Money supply consists with growth and inflation objective, credit to private sector grow, in line with the growth of non-hydrocarbon sector, and this is being almost in the double digit, and that's what we target for the private sectors. Low and stable inflation, and that's where we are now at 1.6, our inflation. Now, maybe this graph shows the 4 rates which we are using. So overnight interbank rate appear to be influencing other market, which is we are holding it as a key rate for us, and we expect that therefore serving the roles of being an operating target for monetary policy. So we use it as an operating target, the overnight. Although the under fixed exchange rate, which we have and everybody might have that question. We have a fixed exchange rate at 3.6, and we use some kind of dynamic of managing our liquidity and having all these interest rate and Calador to manage our market, to make our banks more stabilized in liquidity and also financial soundness and stability for the banking sector. So although the under fixed exchange rate, complete monetary independence is not possible, as I think some professor will criticize me in this. Central bank try to influence the spectrum of the market interest rate through both policies, rate changes, and liquidity management. But in addition to that, we can add the spillover and the cross-border and the connectivities factors of the international market, and as also have a weight of affecting our market. So in this graph, we can see the graph show how we are giving key and important role to support the private growth in the private sector. So we can see they are in the double digit in the borrowing side. So private credit and non-hydrocarbon GDP, it is grow in the double digit, and that's part of our also, part of our diversification of our market. So financial and real estate and business service and also construction sector are still growing at a near double digit, which suggests the strong non-hydrocarbon sector real GDP growth will continue in the future. Low and stable inflation. The final output is resulted here. Central bank believe that we are doing our homework a little bit, that there is growth, and they continue holding the inflation at a low base. So that will definitely show what we are resulting at. QCB financial stability framework. Also Article 5 and 6 of QCB, law numbers 13. Not only we touch the monetary policies framework, the stability of exchange and monetary stability and stability of pricing of goods and services, but now we move to financial banking stabilities and financial sector development. And these also become more important as an objective. Instrument tools which we use, we implement Basel III. Capital adequacy requirements include capital conservative buffers and liquidity ratios, and also liquidity coverage ratios. And net stable funding ratios it really has been implemented since 2014. In the macro-prudential leverage ratio, liquidity buffers, high quality liquid asset, and loan to deposit and credit ratios exposure limit by sectors, by borrowers, by country, also has been implemented, and LTV ratios and DSIP, domestic significant banks, is also very important for us to look at. So other instrument which we are now also using is the stress testing, early warning indicators, and early warning system, and financial market infrastructure. How we implement this, not only in the monetary side, but also in the financial and banking stability and this. We have regulation of banks, and we supervise the banking in a day-to-day basis, and we are reporting. We receive reporting, and and the banks disclose all the requirements which we need. And also we have a regulatory coordination between all the regulatories, Qatar Central Bank, QFMA, and also Qatar Financial Center regulatory authorities, and they are also working together in the financial stability and risk committees, and they are building up a dashboard and early warning indicator if there is something happening to the market. So where we are now in this financial stability, we have already implemented macro prudential tools. Basel III is there almost, and we expect by 2008 to be completed. So capital adequacy's requirement is now still, banking is above that requirement. We, in first quarter of 2015, 15.2%, while the requirement by the Basel III is 12.5. Loan coverage ratio, liquidity coverage ratios is also will be completed by 2018. Banks has already went and took over 60% and 10% from last year every year. So by 2018, it will be completed. And we also, in the macro prudential tools, leverage ratios and others has been also will be completed by 2018. Stress testing, Qatar Central Bank does it for banks, and banks by itself do it for their own, for all the balance sheet items and also for any impact from outside or inside the balance sheet. So then we match the two stress testing, and then we find out if our stress testing has diverted from their stress testing. And we have also a dashboard. We are in the final stage to build between all the regulatories, QFMA, QFCRA, and Qatar Central Bank. And financial market infrastructure continue being strengthened and to be implemented. DSIB has been taken care of, and this is domestic systematically important banks. And the circular for this subject, which Basel wants us to implement, has been gone in 2014. And we identify about 6 banks. They are in the domestic systematically important bank. The idea is identifying banks whose either based on their size or domestic interconnectivities or complex in the product which they are providing. So this is where the DSIB being identified. So 6 banks in Qatar is the one which has need to complete this by 2016. We have counter-cyclical capital buffers expected to be finished by end of 2016, and enhancement of the early warning system is already in the dashboard. Now, we still see that banks will continue grow in their asset in the double digit, and that's a good sign. Which make us more comfortable in this total asset is growing, that in this graph we see the NPL ratios is declining. That means even there is a growth in the asset, the quality of the loans and the quality of some of this asset maintain at a high quality. Therefore, the non-performing loans is dropped. Now we can move to the bond market development. And you can see that we auctioned the Treasury bill for 91 days since 2011 and 182 days from August 2011 and 273 days in August 2011. We auctioned the Treasury bond 3 years and 5 years and 7 years and 10 years. Outstanding amount today is we have Treasury bill auctioning around 21 billion every month we auction 4 billion. Treasury bond and sukuk, because we separate Islamic vis-a-vis non-Islamic. Treasury bond and sukuk is 87.8. And this is how much liquidity is available for banks if they need to borrow. So that's how much we accumulate in the last. But we developed this to create the capital market, because all these papers is listed in the stock exchange, in the capital market, traded every day. Now we move to what's very important graph for us, and what's where we reached. Our yield curve has been developed, and we extend the maturity up to 10 years. So this will tell us a lot. We have a normal curve, or we have inverted curve, or a flat curve. That will tell us a lot about the future market. Now it's a little bit upward. That's due to maybe the risk premium between period and also the time value. And also, it's also for somebody who's really interested, the slope of this curve is very important. And also the shift movement to be understood, it's also very important. So it could be from internalities or externalities factors, or spillover from any other factor. So we have a lot of information to tell, and this is a base for a future capital market development. Because from here, we have a risk-free defined, and from a risk-free defined, we can add later on, and you will see that we will be creating a small companies for rating to determine the risk premium over the risk-free for any company in the market where they will issue their bond. Now the market has been developed, and we can see in the end that there is a domestic credit rating working. We are working hard to be finished by end of 2016. So maybe in the coming future, I think after we establish our credit rating companies, which is very small for our local currencies and for local domestic companies, that a lot of banks and companies, they can have availability to issue short terms and long terms bond, and with determining a risk premium over the risk-free interest rate. Development of the broader financial sectors, we have now finance companies, there are 3, and we have investment company, exchange houses, about 20. We have insurance company, which is being regulated by us now. And we are also, the most important 2 element is the Qatar Development Bank, which is emphasized in the SMEs financing, and also emphasized in the creating the incubator for the entrepreneur. So that's also a market where the SME to be developed. Credit Bureau, which is the last items, established in 2001. It helped us to reduce the non-performing loans, and that's contributed a lot to the reducing the risk, and also strengthening the soundness of the financial system in the private and also in the corporate side. We trying now to develop our financial market infrastructure. QCB has been consistently bringing about significant improvement in the financial infrastructure, and it has been, I think I already touched on that. But in the financial market infrastructure, we have Qatar payment system, and we have the GCC net, and we have the national ATM and point of sale, and the QMR transaction has been electronically done, and the QPay, which is Qatar National Payment Gateway in this. This is the most important element for the functionality of movement of the money inside the domestic market. And in the regulatory infrastructure, we have strategy plan for the financial sector being implemented by all the regulatories, and we are already having the IBAN, International Bank Account numbers, is mandatory in Qatar for processing of remittance-related transaction. And QPay is implementing on one-time password, OTP, and QPay personal identification numbers, PIN number based and authorized for credit transaction. In addition to this infrastructure, which is electronically not interest for the monetarist or for the prudential part, but the RMB center has been, and this is a clearing settlement center established in Qatar. This is an MOU with People Banks of China, signed in 2014, and the launch of Qatar RMB Center in April 2015. RMB Clearing Center now in Doha, creating the necessary platform to release the full potential of Qatar and the region trading relationship with China. It will facilitate greater cross-border RMB investment and financing by businesses and promote greater trade and economic link between China and the region. And now it's growing, and I heard, Michael, today this amount is reaching more than 60 billion, RMB. So we can move to the current policies. Global financial market now uncertain. We know there is a talk of the US interest rate might change, and tightening of external financing condition might be happening due to the higher interest rate, will affecting the borrowers who is borrowing in the dollars, and the implication of slowdown of emerging market, and oil prices stay as an average, which is 40, which is continue pressuring the budget of all these oil producer countries. Central bank's role in this, we ensure comfortable liquidity in the system, ensuring stability of domestic interest rate, and maintaining the health of financial system. Now this graph show how the customer deposit, the private and public, but that's due to the growth year to year basis. Now we come to the important pictures, which is very important for us. This is a QCB managing day-to-day liquidity in the banking system so as to maintain the stability of the overnight rate. The overnight rate has become the most important objective for us. It should remain within the corridor set by the QMR deposit rate and the repo rate, which is the QMR lending rate. And that corridor we maintain it in a day-to-day basis. And this is what we watch in a day. We don't publish this, but maybe you will see it in our website. So we have also look at the outlook. Carefully, we are watching the global development around us and the cross-border spillover, either by policies or connectivity, because a bank become now internationalized. It could be a bank here, main office here, but they have branches in a different country. These countries, they behave differently in their economy, different in their policies, and this might affecting also our institution. So we are also working very carefully in the spillover and connectivities issue. And also policies of monetary decision is also very important. Low oil prices is another issue. Now to maintain monetary and financial stability, we will continue doing the auctioning to measure the market from a liquidity and interest rate behavior. We have also very good committees between us and the fiscal policies, and that's a very good coordination between us and our people in the Ministry of Finance. I think I reached to the final, and thank you very much. maybe there is, if there is any question, there is any question from banks here? Yes, how are we going to start? From here? Mr. Al-Khalifa.
Thank you so much for this great presentations. One small question here. Given that the reals is linked to dollars, and the market forecast that dollar rates will go higher by either year-end or early next year, does it mean the Qatar Riyal will follow?
Well, there are two issues. One issue is we can look at it from the change of the interest rate in the U.S. How much significant will affecting our market? This is first. Second, we look at our market as is different environment and changes than the U.S. market, where they need to raise the interest rate. So we might not need to raise the interest rate based on the liquidity study, and also we look at how bank also funding the private sector. So also our objective to let the private sectors also to grow in the double digit. We will continue making that stability for the interest rate, and I mentioned there is a corridor between the QMR deposit and QMR lending rate. So overnight is targeting, liquidity management by auction is targeting. How we can feel if there is a spillover and effect by auctioning. When we do auctioning every month in Tuesday, we can see bank by bank how liquidity is there and how the spillover affecting the interest rate in each bank or in any maturity. Therefore, there is chances not to do anything, but there is also chances we might do something. But I can say there is no need to do anything at this moment. Based on the huge liquidity, and you said there is 120 billion sitting for you, as you can discount it, you can repo, you can also call it, ask the central bank to call it any times. And this is, if we look at it from a theoretical part, there is a theory of injection and leakage, and this is a leakage from the system. It's not going to the Ministry of Finance to be injected to the market. So it's not managing a fiscal liquidity, it is sitting in the central bank as a leakage of liquidity ready to go to the banking sectors. I hope my explanation is understandable.
First question was from the Group CEO of Al-Khaliji Bank, Mr. Fahad. Please identify yourself and affiliation. Next question. Yeah.
I think there's somebody behind here. Where is the second question?
I'm with Doha News, and our question has sort of something to do with the real estate market, which is not something that we talked about. We want to know what measures is the central bank taking to prevent the real estate market from overheating?
See, the real estate subject is has so many areas to be tackled. One is that we have a low interest rate for financing to provide more housing. If it's a housing and rent issues, then the problem is not there. But if it comes to the price of land and scarcity of trading of land, that's something else. So pricing of real estate is part of mandate that we have ratios set for industrial of the loan to deposit or loan to the sectors of the real estate financing. We reduce this sometimes. We have this instrument. We reduce the ratio. We relax some of the collateralization. We do a lot to make the market more, going in without any interruption in the pricing or in the rent side. But if it's coming from a demand side, very quickly, that there is a growth side in this area, there is a huge, in this very short period, to build housing, to build things, it takes times at least couple of years. But one thing you should have in your mind, there is no increase in the raw materials which is feeding to build these. So therefore, there is no worry in the inflation side. Thank you.
Hi, I'm a research fellow at Georgetown University, and my question is, what has been the biggest challenge for the central bank in terms of dealing with the Qatari economy?
Well, there is no challenge at all. The only things which we have seen in the last, after 2008 crisis, we have to develop our instrument. As we go with the fixed exchange rate, we have to provide so much instrument for managing liquidity and managing overnight interest rate to build up our capital market. So therefore, we, with all these instruments, auction and Calador for QMR deposit and QMR lending, and also targeting the overnight rate, and all these help us. To develop all these need, it's a big challenge, yes. But we are feeling very comfortable for the last 2 years that this instrument has been working smoothly, and it has been by a special department is measured and also tested. And it's really significant for us to tell us a lot of story, whether it's in domestic market change, in macro or micro, or from a cross-border effect as a spillover or cross-border. So we measure all of these. So that's the challenge, was to develop all these kind of instruments. Thank you.
Okay, go ahead, please.
Hello, I'm Hamad Araji. My question is, given the fact that there's over close to 120 billion QRs for borrowing, is the intention to ease borrowing for real estate, and would that impact the reserves on real estate and the percentage of mortgages of real estate and things like that? Or it's sitting there to maintain stability and comfortable status that banks can borrow, they have the access to the funds and they can borrow from these funds?
See, banks, we target our interest rate overnight. Well, banks look at their own position in their liquidity or whatever to finance these sectors, which is real estate or any. In case they need to go further, we cannot ease an interest rate over a sectorial part of it, whether it's a service or real estate or this or that. So the banks has to play a bigger role to do their homework of borrowing and funding, and also managing their own liquidity. Then his cost of administration and operation cost become more under control to make it profitable in the end of the year. That's how the dynamic work for the bank. So decision, it is within the balance sheet contained inside the bank's decision.
Iftekhar Ahmed, Chief Financial Officer, Ali Bin Ali Group. I have a comment and a question. I think this is the first year in 2015 when the non-hydrocarbon sector will grow more than 50% of the GDP. So I believe it's a very good success of the central bank and the economy of Qatar for diversifying. So that's a comment. Congratulations. On a question front, I'm sure you face the question every time. I'm talking about the exchange regime that we have, a fixed exchange regime of 3.64. Now there are pluses and minuses of having a fixed regime. Do you plan to relook into a floating regime in near future?
Well, at the moment we have no decision, we don't think about changing our policies. We have established our policies since 1982. I remember this, the day which we fixed the exchange rate. It became an anchor for nominal inflation, and it worked perfectly to hedge against inflation. So therefore, there is no need to change the fixed exchange rate at this moment.
Yeah, I'm a business administration freshman at CMU, and my question is, how does QNB utilize fiscal policy, especially with respect to taxation rates?
I need to say what's the fiscal policies and taxation.
Yeah, how does QNB utilize fiscal policy, especially with respect to taxation rates? So, QCB, yeah.
UCB, we don't, we are independent from the fiscal policy at all. Fiscal policy deal with budget management and also their, tax rate. But we have nothing to do with these issues,
Question came from a freshman.
Yes.
Ali Al-Kawari, Group CEO, Qatar National Bank. Your Excellency Sheikh Abdulla, first of all, I would like to thank you for a very enlightening presentation. I was wondering, coming here, how is Sheikh Abdulla going to summarize the monetary policy in 45 minutes? But you've done it. Very good job. Excellent job. Sheikh Abdulla, my question...
The Dean has asked me.
But
He told me no more than 45 minutes.
Well done. 45 minutes summarizing monetary policy. I think this is a great achievement, Your Excellency. My question is going to be about the planned GCC single currency. As we know that there is a plan in place to launch a single currency for the GCC. And just wondering how are we going to resolve the issues, especially the alignment between the fiscal and the monetary policies, especially not to fall in the same trap like in what happened in Europe, for example, where there is a differentiation between fiscal and monetary policies and led to some problems. So is there any, tools or instruments, going to be used to avoid?
I can say something about this. About the GCC currencies, it's going on with a good rhythm. There are three areas, very important area we are working in. One of them is monetary policies, second is fiscal policies, and the third is common market. Common market means pension issues, flow of capital, movement of labors, and other things. So that's the common market what we define. But we define fiscal policies and monetary policies as a key element. In the monetary policies, we are almost reaching, I can say 80%, 90% to complete the harmonization and trying to figure out and learning the lesson which the European, our friend, went through. And we are learning a good lesson. We believe that we came in the right, maybe in the right times to learn this lesson. And we are really, in the monetary policy, 90%. In the fiscal policy, there is some harmonization. There is coordination in the taxation, harmonization issues. There is also in the understanding the behavior of the budget, movement and expansion and contraction, and how to manage the deficit and surplus, and also other things. Now, how do we coordinate? We have a committees between these two markets, which is the monetary side and the fiscal policy, getting together to discuss a lot of issues, which is not only we're going to face, but also our friend in Europe face. So also we are sitting with our ECBs, learning a lesson, and trying to figure out also the better way to make it easy for us to coordinate. True, it's a very big challenge between fiscal policies and monetary policy to get together somehow. But there are now very good, in the GCC, there is a committees below, but also in the ministerial level, we meet at least once a year to discuss these challenges and see how we can improve the coordination of managing and also understanding the behavior of fiscal and monetary policies market. The common market is also as important as these two. Mobility of capital, movement of capital, labor, pension issues, and other things. This is also and also movement of goods and services between and among these countries. So all this is all as important as fiscal and monetary policies. Yes.
I'm Hamad Al-Hur, a Carnegie Mellon student. So I would like to thank you first for your great speech and presentation. So we talked about the precautions you're taking into account that the U.S. Increased their interest rates, such as enhancing and monitoring the liquidity. But are there any certain implementations that are going to happen if they actually increase their interest rate?
There is implementation. The interest rate is very important for us, and our overnight rate is very important. So we will be targeting our overnight stabilization rate. Now, you're talking about the impact. The impact, if somebody is borrowing in dollars, yes, might have some kind of impact if he's taking it as LIBOR plus, but not the system, so individual. So how much he will carry the cost? He's going to shift to another currencies, or he's going to stay with the dollars to finance his, project. That's another thing. But as a monetarist, I don't think there is such a thing to worry, because the chances of raising it by 0.25 or by 50 is not a significant thing. So I'm very comforted that our rate and our reserve requirement has been kept high since 2008 to, to reduce the multiplier effect and also to reduce inflation. And now inflation is 1.6, and the growth of money supply has been within our target. So we are very comfortable at this moment. So there is no need to worry about this. Yes.
Your Excellency, my name's Akbar Khan. I'm from with Al Rayan Investment. Question, you referred to the regulation, and we obviously have three regulators, the Qatar Central Bank, QFMA, and QFCRA. Are you happy with the current level of coordination between the regulators? And also, do you think there's any room for enhancement as to how they work together? Thank you.
Thank you. I think the coordination is really, through the Financial Stability Committee is doing excellent work. And the Financial Stability Committee is dealing with two issues. One, coordination of the prudential rules, which we are implementing, that it should be harmonized. And also, it's already there. And also coordination in creating a dashboard to manage the early warning indicators, risk or anything. And there is more chance for enhancement. Yes, there are. But we are really in a day-to-day connection between all these regulatories. But also we meet every month in the Financial Stabilities Committee. So I think the coordination going in perfect for us. Thank you.
One more question. John O'Brien.
Your Excellency, John O'Brien from Carnegie Mellon University. You've described a really impressive development of the financial market infrastructure here in Qatar, and among that is the development of the access to yield curve information, which is most important. So my question is, are there any future plans to introduce the Treasury inflation-protected securities, which would give real rate information as well as the nominal rate we have at the moment?
I think that's something we are thinking about it, and it might be, yes. And at the moment, I think we are comfortable about the yield curve and the spread between these time value and the risk premium is there, and the shape and the slope of the curve and the movement impact, which we are studying it. There is something is interesting, the impact of spillover. and cross-border impact today is really part of the shifting or might be movement of pricing over the yield curve. So we are trying to build up that it is it in the short period or it's in the long period. So it's very interesting. We are almost completing the 10 years horizon. So we extended up to 10 years, and we are working to see how this will play a big role. And later on, we will see that idea, and we would like to hear more in the future. Thank you very much for that question. Thank you.
Before we are dismissed, there's a little reception right after this. Students, remember the advice I gave you the other day. There are a lot of bankers here going through this yourself. Form your network right now. Couple gifts for governor. One is the classical gift. And this one is a book written by Professor Alan Meltzer of Carnegie Mellon University in Pittsburgh.
Thank you very much.
Alan Greenspan said he never minded questions from media, but he was always nervous when Alan would ask a question. This is his book.
Thank you very much.
Thank you.
Thank you very much for listening, and I hope I'll see you next year. That's what we